Hey, welcome to the show. You know, 2022 has been a rough year for crypto investing, and it's led a lot of people to conclude that, crypto is a scam, crypto is a waste of time, and sort of write off the technology side of this particular market. Today, we're going to talk about one of the largest and most significant use cases for digital assets and crypto technology, or cryptocurrencies. And this is called atomic settlement. And it's my opinion, one of the most revolutionary sort of applications for this type of technology in the financial markets. Alrighty, welcome. I'm Molly Elmore. Nice to see you today. We're going to talk about some crypto technology stuff and how uh, atomic settlement is going to revolutionize a particular facet of financial markets. And by that, I'm talking about the stock market and bond markets. So, anytime you have two people in a transaction, there are sort of two sides to the risk equation. So let's say, for example, you are buying a widget off of eBay. And the way this works is that you pay for the widget, and then the seller, hopefully quickly, sends you that widget. So while you are waiting, meaning after you've paid but before you've released that widget, there's sort of trust required on your part. Because what if the seller just never ships the widget? You're kind of stuck, right? So you have to have this environment, this marketplace that builds in trust into the platform. That's why reviews are so important on a platform like eBay, because you want to trust that this seller is sort of good for their word, and that if they say they're going to ship the widget, that they actually will. So alternatively, it's not going to happen on eBay, but theoretically, you could require that the shipper send you the widget before you pay, right? That would help alleviate the risk from you that the seller is kind of a flake and not going to send the thing. But that then puts this risk on the seller, because what if they ship you the widget and then you never pay? This situation is called counterparty risk, where you have two people in a relationship of sorts in a transaction, and one party has to trust that the other party is going to honor the agreement. And this is not unique to stock market or eBay. I mean, this is the case in all sorts of things, in employment agreements, if I hire a contractor, in real estate. If I go and kind of sign a contract that I'm going to buy a property and the property gets taken off the market, there's a certain amount of risk that, well, what happens if, the person who's buying it is a flake and doesn't have the money, and, the deal falls through. So in business in general, there is this big issue around counterparty risk and trust, which is kind of an expensive problem in some cases. So in the situation of the stock market, if I were to buy a stock, let's even just keep it simplistic. So let's say I bought a stock from someone else who, owned it, but we bought it sort of through this marketplace. I may immediately say that I want the stock, and that seller may immediately agree to sell me the stock, but the actual paperwork and the financial side of that transaction, it takes like a couple of days to settle. Sometimes it takes like 2 days. And what that means is during that 2 days, lots could happen. The seller could disappear and never sell me the thing. The person buying could turn out that they don't have the money and that they are not able to complete the transaction. So there is counterparty risk in the stock market, and it requires that a lot of these larger exchanges use a business called the DTCC to sort of settle these transactions. And there's a lot of administrative employees who are involved in making sure, all right, did Bob pay for his stock? All right, did Mike get payment for his, et cetera, et cetera. And this is sort of what's called the back office. Is probably the less kind of glamorous side of stock markets and bond markets. And I would be pretty confident that a lot of the companies in that space that have to pay for this back office staff would love to not have that expense. No disrespect to the people who work in those jobs. Hopefully you'll find a different job, but there's a lot of indicators that blockchain technology and smart contracts will make that essentially go away. I did do a video a while ago about Project Ion. So if you've seen this, is a little bit kind of overlapping of this. But this week, the DTCC, the Depository Trust and Clearing Corporation, they released a report with the Digital Dollar Project indicating that they are using a CBDC type technology, which simply means that the Central Bank of the US has issued these sort of digital assets to settle transactions for markets. I'm assuming the stock market, but it could be bond market or derivatives, like whatever the DTCC settles, which I think is mostly stocks and bonds, then and derivative products, that's sort of included here. And the idea is with a smart contract, it's like a little computer program that has a bunch of if-then statements. And it can take these two parties in a transaction and say, all right, party one, do you have all of your stuff in order? So if you're buying the stock, do you have the money? And the smart contract can actually look at your digital wallet and check the balance to make sure that if you want to buy $100 worth of stock, that there literally is $100 worth of value in that wallet. And then it can look at the seller and say, all right, seller, do you actually own this asset? This would obviously require that the stocks and bonds would be tokenized and sort of live on the blockchain. And the smart contract would check, all right, seller, do you have 10 shares of token stock X? All right, cool. It kind of checks that all the conditions have been met. If they have been met, it executes the program, which is to essentially process the transaction. One party gets the payment, other party gets the stock, boom, done. No counterparty risk. No party had to put out their asset and wait for the other side. This was done automatically. This might sound like a little bit of a familiar scenario if you've ever bought a house or involved in real estate, where you might sometimes have to take your money and put it into an escrow account. So it kind of sits there waiting. Like you've proven that you have the money because it obviously goes in the escrow account, but whoever is going to get that money eventually isn't able to get it until certain conditions are met. So this is basically automating this kind of escrow process, but also speeding it up considerably. Because escrow, you have to have a bank to do it, and usually an attorney or real estate agents involved. It's not something that you would probably want to do for a small transaction like $100 worth. And it's not likely a great solution if it's something you want to execute very, very quickly. So imagine escrow that can fit any budget and can function instantly. And that is the amazing idea around blockchain for settlement, is that it removes counterparty risk. It removes the need for overhead and staff to sort of manage the counterparty risk, which is kind of like the accounting people have to follow up to make sure everybody paid their bill and that people got their stock transactions. It also will speed up transactions. Right now, I said, with DTCC, it takes 2 days. So if, let's say, a stock is like moving real quickly, I might want to own it sooner than 2 days. Maybe I want to be able to buy it and sell it very quickly. I don't know how that actually works with the DTCC with sort of day traders, but theoretically, you're selling something before you technically own it. So it's an interesting question. Now, PolySign is a company we've talked about here before. They are a cousin company to Ripple, founded by David Schwartz and Arthur Brito, who are early Ripple smart guys. And PolySign is essentially an institutional custody provider. And that means they function like a wallet for large institutional businesses that would buy and sell a lot of digital assets. And when people first hear about PolySign, it's often thought about in terms of like Bitcoin or XRP or Ether, some type of digital asset that a hedge fund or a mutual fund might want to own a lot of. Well, that's kind of thinking very small. What if everything is tokenized? Something we've also talked about on this channel, literally real estate, energy, stocks, bonds, all the money, all these things are tokenized. Let's even just talk about the stock market to keep it simple. Let's say the entire stock market, like all of the stock markets, the New York stock market, the NASDAQ, the British stock market, the Japanese stock market, like what if they're all now tokenized, and you have these businesses that own these digital assets, how do they keep them safe? They're not going to use a little tiny plastic cold wallet flash drive looking thing and trust that one employee is going to like keep this thing safe. They're not going to, trust an employee to some 12-word seed phrase to manage $100 million worth of, assets. So PolySign is the institutional solution for it. I have no idea how they do it because it's a very tight-lipped organization. There's been very little disclosed beyond sort of the use case and problem that it solves. But essentially, it takes the kind of cold wallet solution that works for individuals like us, and it kind of gives institutions a way to securely custody their digital assets, which includes cryptocurrencies, but much bigger than that, all digital assets, which could be all the money that they own, all the real estate, the stocks, the bonds, and it's also looking like energy will be tokenized, which is massive too. So if you are a hedge fund and you have, $1 trillion worth of assets, keeping those assets safe from being hacked is a very significant concern. And that's kind of how PolySign comes in. So let's say PolySign custodies your assets, but you're spying and selling. Like you don't hold your position on a stock forever, right? How does that literally work with you selling it? Can you have it participate in a marketplace without you sort of like giving up your secure holding? And that's where this kind of atomic settlement smart contract comes in. It's strongly believed that a company's called Codius will use their smart contract software to link with PolySign's assets that they're holding for their clients. And this would allow these types of transactions to buy and sell to be done securely. And atomic settlement is kind of how those transactions would go through so that nobody has to take on this counterparty risk. And the kind of entire back office industry that currently kind of manages the administrative side of this kind of goes away. And that's one of the, in my opinion, the best uses of technology is to make something more efficient and to reduce friction, which in this case is cost and time, so that this industry now can operate more efficiently and become less expensive. So this is kind of a good example of inflation. It might actually be cheaper to run a business like this, not because the value of things have gone down, but because operational efficiency has made running a stock market or institutional investing business or whatever you want to call it run more smoothly. There's also this issue of kind of fraud that could happen. And if it's done via smart contracts, then it kind of checks that you actually own this digital asset and you're not trying to sell something that you don't legally sort of have the rights to. So that is what is referred to as atomic settlement. I've also heard it called instant settlement, but the idea is that transactions would be kind of processed very, very quickly using little computer programs called smart contracts, and digital assets would be used to pay for those transactions. But this is much, much bigger than any individual cryptocurrency. This is applicable to the sort of next financial system that we're likely moving to, where all the money and all the assets are tokenized, and they need a system to be able to be traded and bought and sold with other people. So that is atomic settlement. If you like this video, please like it, subscribe to the channel, and I will see you in the next one.